$22.9 billion. Just wrap your head around that for a second. That is the massive 7-year Tomahawk defense contract that aerospace and defense giant RTX just landed. It's one of those absolute headline-grabbing figures that immediately makes you sit up and pay attention, right? But here's the thing. That $22.9 billion, it's really only a fraction of the full story. So hit the brakes and take a look at this next figure, $289 billion. Yeah, you heard that right. That represents RTX's staggering total backlog, which just took a massive 22% jump. We're literally talking about a mountain of future business already sitting on the books, just waiting to be fulfilled. And it's not just promises of future revenue either. Quarterly sales just jumped 14.5% to nearly $24.7 billion. I mean, the business is clearly firing on all cylinders right now. But all of these staggering numbers force us to ask the ultimate investor question. Is RTX entering an unprecedented defense and aerospace boom? Or, with numbers this large and public, is all of this success already completely priced into the stock? Welcome to The Explainer. Today, we're going to dissect RTX's massive numbers. Our goal here is to separate the shiny illusion of a gigantic, record-breaking backlog from the gritty, on-the-ground reality of manufacturing execution. We're going to break down the mechanics of this business and figure out exactly what it all means for you. Here's our roadmap for The Explainer today. We're covering 1. The massive RTX backlog, 2. Two huge industries combined, 3. The execution challenge, 4. Bull versus bear case, and finally 5. The valuation question. Let's get right into it. Okay, let's dive into this with Section 1. The massive RTX backlog, peaking behind the $22.9 billion headline. So understanding the sheer scale of this new Tomahawk contract is absolutely crucial. You see, this isn't just another routine defense order. We're looking at a dramatic shift in the global defense environment. Governments everywhere are fundamentally reassessing their military readiness. Right now, the United States and its allies are heavily focused on expanding long-range strike capabilities and urgently rebuilding their missile inventories. For a company that produces highly sophisticated defense systems, this creates a tremendously powerful multi-year demand opportunity. But to think of RTX as just a missile company would be a massive mistake. Which brings us to Section 2. Two huge industries combined. The anatomy of RTX. We really need to transition from viewing RTX as just some monolithic defense contractor and start understanding it as an interconnected web spanning both military tech and commercial aviation. When you break down that $24.7 billion in quarterly sales, you actually see 3 distinct businesses. First, there's Raytheon, the defense side, with the missiles and air defense bringing in $8.27 billion, up 18%. Second, Pratt Whitney, the aircraft engine business, generating $8.89 billion, up 16%. And third, Collins Aerospace, supplying aircraft systems and components at $8.21 billion, up 8%. Notice that RTX isn't just relying on a single division here. 2 out of their 3 major businesses are putting up double-digit growth. This unique setup is huge because it gives you exposure to 2 massive macroeconomic trends at the exact same time: rising defense spending on one side and growing global air travel on the other. While Raytheon gets all the flashy headlines for weapons, Pratt Whitney and Collins Aerospace are quietly capitalizing on a massive commercial airline boom. Think about it. Airlines desperately want more aircraft, and passengers want to travel. Well, every new aircraft needs Collins avionics, and it needs Pratt Whitney engines. Plus, an engine relationship doesn't just end at the sale. It requires lifelong maintenance, parts, and overhauls. That creates incredibly valuable recurring revenue for the long haul. Let's move on to Section 3, the execution challenge, the production problem behind the numbers. Now, having customers clamoring for your products is great, but it's really only half the battle. This is where we enter the reality phase of our explainer, because a giant backlog only creates actual shareholder value if the company can, actually execute. So let's just clarify what a backlog is. It's business that has been ordered but hasn't yet been delivered. Yes, having $289 billion in the pipeline provides incredible visibility into future demand. It's a massive safety net, but it absolutely does not mean every single dollar automatically becomes revenue or profit today. The real test is how quickly RTX can convert that backlog into actual cash. And that brings us right to the manufacturing hurdle. Check out this comparison. Raytheon is targeting an increase in Tomahawk production from roughly 60 missiles a year to more than 1,000 missiles annually. Just let that sink in for a second. From 60 to over 1,000.
That is an extraordinary, almost incomprehensible increase in production scale. I mean, it places intense, relentless pressure on Raytheon's factories to perform. To make a leap like that, they have to navigate some severe industry roadblocks. The defense industry has spent years battling supply chain constraints and labor shortages. Making advanced aerospace and defense tech involves highly specialized manufacturing requirements, and there is strictly limited production capacity. But there is a silver lining here. Because supply is so constrained across the board right now, companies like RTX that already have established production capabilities become incredibly strategically valuable. And management clearly believes they can navigate these roadblocks. RTX recently looked forward and actually raised its 2026 sales guidance to between $95 and $96 billion. They also bumped up their adjusted EPS outlook, so they're sending a strong signal of confidence that they can scale this thing up. But let's be real, revenue is just top-line vanity if it doesn't translate to the bottom line. Take a look at this free cash flow guidance for 2026, $8.5 to $8.75 billion. Ultimately, this is what investors really care about. How much actual, real cash can the business extract from its backlog? Because that cash is the lifeblood used for 5 critical activities: paying down debt, paying dividends to shareholders, buying back stock, making strategic acquisitions, and, crucially right now, reinvesting in that desperately needed additional production capacity. All right, Section 4, bull versus bear case, weighing the potential against the risks. And this brilliantly illustrates the tension here. We've seen the massive potential, and we've seen the massive hurdles. It's time to weigh the two scenarios. Let's build the bull case first. Imagine RTX seamlessly converts its backlog. Imagine defense budgets remain elevated globally. Imagine they successfully hit that target of over 1,000 Tomahawks a year, all while Pratt Whitney and Collins ride the massive wave of commercial aviation demand. That is a powerhouse with multiple engines of growth. But now, flip to the bear case. The reality is, defense manufacturing is brutally complicated. Rapidly scaling production from 60 to 1,000 units creates entirely new, unexpected costs. Government budgets fluctuate, priorities shift, and contracts get delayed. If RTX struggles to increase output, well, that $289 billion backlog might just remain a number on a piece of paper for years, failing to translate into timely revenue. Which brings us to our final part, Section 5, the valuation question. What price are you paying? That tension leads us to the ultimate challenge for anyone looking at this company, the valuation. Because even the greatest business in the world can become a bad investment if you pay too much for it. Remember, the market is smart. Everyone already knows about the defense cycle, the massive backlog, and the aviation recovery. So the question isn't just, is RTX a good company? The real question is, what price are you paying today for those future cash flows? To figure out if the price is right, you need to monitor these 5 specific metrics like a hawk. Number 1, backlog conversion. Are those orders actually becoming revenue? Number 2, free cash flow. Is that revenue turning into real cash? Number 3, margins. Can they scale production without destroying their profitability? Number 4, Pratt Whitney's performance. Is the commercial aviation side sustaining its momentum? And number 5, Raytheon's production. Can they physically build those missiles fast enough? If these indicators trend up, well, the valuation might make a lot of sense. Which leaves us with this final thought. RTX is uniquely positioned at the exact intersection of a commercial aerospace boom and a massive global defense cycle. They have the orders. They have the technology. Now it's all about execution. So I'll leave you with this. If defense spending keeps accelerating and commercial aviation refuses to slow down, is it possible that the market is still underestimating what this $289 billion backlog could eventually be worth? Think about it. Thanks for joining me on this explainer, and definitely keep your eyes on those production numbers.